This video, we'll be talking about interest rates and whether they will have an impact on Australian house prices. Okay, so I know so many of you are sort of thinking now, hey, interest rates are going to increase. I better hold off from buying residential real estate because prices are going to plummet. Okay, so I'll be talking about whether that is actually going to happen. And the second thing is that if you actually understand the data and you do want to invest, which are the three best cities to invest in residential property right now in Australia where it's not too late? Okay guys, my name is PK and I help people build passive income through property using data without needing a $15,000 buyer's agent every single time. And this channel really exists to help you guys get ahead through property. So if this video brings you value, if maybe my others have brought you value, please hit the subscribe button, turn notification bell on, and give it a thumbs up. That way YouTube gives it to more people. That helps me. So what you're seeing right in front of you is precedents. So what you're seeing here is select times where interest rates have moved up really quickly. Okay, and what house prices have done. So I know what you're thinking, hey PK, whether you believe it or not, interest rates are going to go up, the official cash rate is going to go up, RBA is going to increase that because we've got seeing inflation coming, right? And if interest rates go up by 0.5%, 1%, 2%, 3%, house prices, this is all a bubble, is all going to come crashing down. I ain't going to invest in property right now, PK. That's what you're thinking. Many of you may be thinking that. Here's the precedent. So let's go through, and I got this from Pippa, also you can get it yourself at RBA and ABS. In the dates from June 94 to December 94, the official cash rate increased by 2.75%. Like, that's huge. I can guarantee my entire reputation that, for what that's worth, that interest rates aren't going to increase by 2.75% in the next year or even 2 years. But even if they did, check it out, within 6 months, house prices still increased, right? They still increased. And so there is obviously something else going on, the fundamentals of demand and supply. Let's take another example from September 99 to September 2000, so a year. They increased by 1.5%. Now that is still a very accelerated rate of increase, something that the RBA will probably never even think about right now, given how shaky the economy is, how susceptible we still are to lockdowns and COVID, next waves. You can see right now, as at time of recording, Europe or UK is going through a fourth wave of COVID. So, these kinds of rate rises are just not going to happen. But even if they rose that fast, you can see in that 12 months, house prices rose by 7.5%. What? I know you're thinking, hey, isn't that meant to be the opposite relationship? This is just real data. In March 2002 to December 2003, just over 1.5 years, interest rates rose by 1%. House prices went up by 35.7%. That was largely because of the first homeowners grant or scheme was introduced. Huge increases. In 2006, in a period of 0.7 or 0.8 of a year, and they increased by 0.75%. House prices rose by almost double digits. In 2007 to 8, just before the GFC, cash rate increased by 1%, and what we saw was house prices rising by almost 10%. And then just before the turn of that decade, 2009 to 2010, just over a year in duration, interest rates increased again and house prices rose. So for those of you who think that there's just some sort of blanket rule where when interest rates go up to try curb inflation, that house prices must come down. Now, obviously, these are just 5 instances in time. There are plenty of instances in time in the last 40, 45, 50 years of Australian property investment history or residential housing history where interest rates have gone up and property prices have come down. But the point of illustrating this is to say that does not always happen. There are other forces at play. And I'm going to come back to the three best cities that you should be investing in right now, and how there are other supply demand forces at play. I'll get to that in the second half of this video, but if you're getting value so far, guys, if this insight that there's not necessarily a correlation or causation between interest rates and house prices, if this is sinking home, if this is hitting home, hit the subscribe button, turn notification bell on. Second case study. All right, so you might say, well, those are interest rate changes. Let's have a look at absolute rates of interest. So in 2016 to 2019, the official cash rate was about 1.5%. All right, so this is still huge. I mean, we're under 0.5% right now. This is still more than 3 times our current cash rate. And check it out. Sydney house prices went down. Melbourne house prices in that time period went up. Brisbane went up slightly. Adelaide went up much faster. Perth went down. Hobart was booming. Darwin was, busting, you could say. Canberra was booming even back then. And overall house prices were just a tad up. So, point number one, you can see that the cash rate has no influence on the overall Australian house price. Different cities work in different ways. I hope you can see this. Some cities were going up, some cities down, some sideways. Now in 2013 to 14, the cash rate which was much higher. It was 2.5%. Now let's check that out. Sydney was booming. I mean, that's really when the boom started in Sydney, as it did for you could see for Adelaide it was doing really well. Brisbane was fairly good. Melbourne was fairly good. Perth was very depressed. The mining boom was just ending. Hobart was a little bit soft as well. It was just before Hobart really boomed. But overall, the Australian property market was going up 11% or 12%. So at a much higher interest rate, okay? So cash rate was lower in 16 to 19, and the Australian property market grew less. Cash rate was higher. I'm talking absolutes, not changes in cash rate, but absolute interest rates. And you can see the Australian housing market grew faster. And if we go all the way back to the turn of the millennium, when cash rate was much higher than right now, 4.75%. I mean, we're not going to get back to 4.7% for maybe 5 years is what I'm thinking, maybe even 7, 8 years. Enough time for you to really build close to a 6-figure passive income, or at least, get that momentum behind that journey. What you're seeing is when cash rate was so high, Sydney was booming 20%, Melbourne 17%, Brisbane, damn, 44%. I mean, wouldn't you have loved to make 44% in Brisbane in 12 months back then? Adelaide 30%, Perth 20%, Hobart almost 60%. I mean, that's huge. 50% growth in a year. Darwin, not so much. Canberra, great. Overall, Australia went up by just over 20%. So you can see what I'm trying to illustrate here, guys. Each city has its own supply demand dynamic. There is not one Australian housing market, but even if there was, even if every city grew at the same pace concurrently, simultaneously, that does not have any impact or correlation or causation to cash rate, to official cash rate. The highest cash rate was in this third row, 4.7%. So you might think, well, that's when the property market was doing the worst. Actually, that was when it did the best, because there are other things that impact the property market, not just cash rate. And that's what we're seeing right now. So the 3 cities, if you're not open to regional, I highly encourage you to look at regional. But if you're looking at capital cities, the 3 cities that I want you to really, really look at really strongly, number 1, Brisbane. There's 30 to 35 data factors that I teach my students, my clients, as part of the core part of my course. But this is obviously one that everyone can freely access. Vacancy rates. You can see at a Brisbane level, why a house price is booming in Brisbane right now. One reason, not the only reason, one reason is that the vacancy rate for the city has come down from around 4, you can't really read that, but that's 4% vacancy, down to about 1.5% in the last 3 or 4 years, right? So that is really what drives demand for houses, especially from investors, right? So vacancy rate, it just means that, when vacancy rates comes down, there's not enough rental stock, there's a rental crisis, right? So many tenants want to rent a house. There's not enough houses going around. Rents rise, yields rise. Therefore, investors, it makes more sense for them to earn passive income there. Property prices rise. You can see this is nowhere down to the levels that Brisbane has experienced before. Same thing for Adelaide. I mean, Adelaide, everyone says it's a sleepy city. You can't judge a city or a property market's performance based on history, because history, different supply demand dynamics were at play. So back here, 2016 to 17, vacancy rates were, around 2%, which is not really strong. Now they have more than halved. They're more closer to 0.5%, and that's why Adelaide property prices, many suburbs have gone up $150,000 to $200,000 in the last 12 months. I'm not talking $1 million suburbs that might have risen 10 or 20%. I'm talking $300,000 suburbs that are now $500,000 within the space of a year or two, right? This is advanced property investing. We were buying in Adelaide, still are, mostly around this region, 2019, 20, right? You can see the 30 to 35 data factors start to stack up, and that's how you make money before everyone else comes in. And that's how you let go of those predispositions, those preconceived ideas, those confirmation biases where, just because a property market like Adelaide has been poor, in the middle of this decade or the last decade, it's going to continue to be poor. That's not how things work. And the same with Perth. Everyone always talks about Perth. They think that, hey, Perth, too exposed to mining. It's everyone hates Perth property investors because it's just done nothing for the last 6-7 years. I just did a video on Perth and why you should be really considering Perth for your next property, not only because it's got huge yield, huge passive income opportunities, but check this out. I mean, really, when the Perth market tanked was around 2014, just as when the mining boom, iron ore, coal prices, etc., went down, commodity prices came down, therefore vacancy rates went up. All those people that were employed, gainfully employed, lost their job. They moved out of Perth, therefore there were more supply, more properties on supply, on the market than there was demand. But you can see from about 2017, where no one was really considering Perth, this has come right back down. And you can see it is at the levels of the last property boom in Perth. So if this continues to go down, we're going to see Perth, it's going to be one of those places where in 2 years' time, people were saying, will think that in 2020, 2021, I wish I bought in Perth. I was just too scared, a bit like what people were talking about Adelaide, 12 months ago. So guys, I'm gonna leave it there, but hopefully you took the key takeaways away from this video. Don't be afraid of interest rates rising. They're not going to rise, in my opinion. The official cash rate, at least, it won't. Variable rates haven't really gone up at all. Some fixed rates have started to go up, but some fixed rates from other banks have actually started to go down. Okay, this is where lending strategy and a good mortgage broker comes in. But there's no relationship between interest rates on an absolute level or a relative level necessarily to house prices. There are other supply demand dynamics at play, just like we can see in these three residential property markets: Perth, Adelaide, and Brisbane. These are my top picks for the next 12 months, 24 months, apart from obviously regional areas as well. Guys, if you got value, please hit the subscribe button, give it a thumbs up, and tell me, are you looking to buy in Adelaide, Brisbane, or Perth? Leave the name of the city below: Brisbane, Adelaide, or Perth, so I can see, a bit of crowdfunding opinion. Where are you guys looking? Thank you so much for watching, guys, and I'll leave links below to my podcast, Facebook group with over 10,000 members, clients, investors, and obviously my website if you really want to take things up a level. Guys, don't stall. This is one of the best times to invest in property. Still, you haven't missed the boat. Go for it. PK here. Catch you later.